Thank you for tuning in to another edition of the Vulcan Report. This is the report for Friday, August the 24th. Right now you're looking at a chart of the E-mini S&P 500 futures, and you can see that just like yesterday's video, we did show you how the market was gaining some downside negative momentum. And we do have the pulse scan has crossed below the swing VIX, and you can see the red bars here, which indicates that we have a short-term top that we posted 3 trading sessions ago right here on the August the 21st. That's going to be our high point. We did take out the support that I warned you about the other day. We took that out, that 1407, and the market has now broken below 1400 and is gaining downside momentum. Because it's Friday, it's hard to say. We could get an acceleration to the downside here. We don't have pulse wave negative support until down at like 1345. Actually 1348 and a half, or 1348 even, somewhere around there. That's quite a drop from here. So really, we don't really have any significant support to hold the market up. You might have a very, what's the word I'm looking for? Thin ice, a thin ice layer of support. You might see that around 1373 3/4, but that's a thin layer of ice. All right, it means we could break right through that and just keep accelerating down. The market's still bullish though. See, that's the thing about it. We can go all the way down to pulse wave support at 1348, and as long as we don't close below that, the market can still maintain its bullishness. Okay, it just depends. But here's the caveat. You see the Kumo cloud, the top of the cloud is rising here. It's probably going to break above the pulse wave support and continue to go up. You can see the bottom of the cloud is rising too. So we don't know where the cloud is going to end up, and what will happen is it's going to, it can make this, it could move this negative pulse wave support up also. But as of right now, it's not. All right, so that's just something to keep our eye on. But the negative momentum has started. It started yesterday on Thursday. See this red line shooting up here? That's the beginning of one of these. Let me show you what it looks like. It's the beginning of one of these. Okay. It's negative pulse. That's negative swing VIX right there. Okay. Normally, when you get negative swing VIX, you have tremendous downside momentum. It's like when you have a positive pulse scan, you have positive momentum into the market. Okay, that's what that looks like. Okay, so we're gonna have to wait and see. Time will still tell what's gonna happen. As of right now, though, the market was still bullish. Okay. Now it's starting to run into some question mark here. Still got the bull at the bottom of the right hand corner here, but here we are with the breaking away of the momentum. We'll need to see if we can maintain bullishness. Like I said, we got until we get down here. So we're still bullish, and we still could break out. It's just, where are we going to correct? I want to show you something else here too. All right. You see this bar right here. This is from August the 3rd. We never built support from the August the 3rd breakout. We never did that. We always go back and test this breakout. See this bar here? And see this bar here. On this breakout from August the 2nd, on August the 3rd, we tested that support. We did the 61.8, retracement thing here, and then bounced. But from this bar here, there was no retracement. This August the 6th does not count as retracement. All right, you have to retrace, and we didn't do that. Not even a 38% one. We didn't do that either. All right, not 50, not 30, nothing. Therefore, this constitutes what we call a momentum gap. It's a gap in momentum. Now, gap up and gap downs are always filled sooner or later. Momentum gap, same thing. If you do not retrace the bar, what it means normally is that this breakout is false, no matter how high it goes. It means when the correction does come, it's going to break the support of this bar. On the S&P, that's 1360. So we're pretty much guaranteed that 1360 now is where the market is headed, and it's going to take it out because it never retraced it. It did all this. That means it exhausted itself up here, like a rubber band stretching out, and now it's going to snap back down. It's just how it is, unfortunately. Every other bar was always retraced. You see this one here from July 27th? We got down, tested that support, it held, then took off. Alright? Look at this bar, same thing. July the 26th, same thing. We broke out, right? But before we continue to go higher, we did pull back somewhat here, okay? That 38%, not 50 here, but 38%, okay? Again, we can go back in history, see the same thing. Alright, this bar here from June the 28th. The next day bar did build that support. Then it broke out. Whenever you build support and break out, the market rewards you with a nice extended run. And then when it pulls back again the second time to test the overall move from here to here, again from here to here, you pull back to here again. See? And then you continue to go higher. You blast off. You don't look back. When you fail to build that support on those breakouts, it ends in disaster. It's just how it is. And when we're talking about those elongated bars, those parabolic breakout bars, you have those really big up days. That's what I'm talking about. Volume really has nothing to do with it. It's more so the extent of the trading range is what counts. Okay, so basically, not to beat a dead horse, but you see where I'm going with this, and I just wanted you to see it. So we're coming down, and we're gonna head up to the 1375 to 1348 range. That's just where we're going. This is how it is. All right, let's move on. Okay, now switching our focus to crude oil. Very, very big deal here. As you can see yesterday, we had the beginning of a red bar here. That's a negative swing VIX. Notice how this bar totally engulfs the previous day's bar, okay? Which means that this should start to look more like the S&P 500 chart. So we're in jeopardy now of breaking the 95.62 support. A break below the 95.62, you don't want to see that taken out if you're bullish, because if that 95.62 is taken out, then the next support is going to be at 94.81. After 94.51, we're going to go to the K-line support of 92.55. And that's this red line right here. Okay? And then you have a little range between the K-line and that 91.60, which is right here. Okay? So you have a little fluff in between these two here. Okay, so you got about a buck of airspace in between those two. So your support for this pullback should be somewhere around there, and then it should continue to bounce higher if the bullish pattern is going to maintain. All right, I watch for that. Plus you have a convergence of the top and the bottom of the Kumo cloud here. So these two lines are going to meet, and then we're going to form a basis of another cloud. This should cross above this line and start to head up. The question is, when that happens, is there going to be enough air underneath the market to push oil above that $100 mark, or is this going to meet with the bottom, with this bar, and or is it going to suck the market down into it like a vortex? That will be yet to be seen. However, if you are long the oil, I would caution you here to consider taking some profit off the table, especially because we have this. Here's our last pulse wave right here. We pulse waved on August the 16th, and here we are. That last pulse wave was at 94.81. All right. Now we're up here. You got a couple of dollars in profit built in. You should be able to take some profit off the table. It is a Friday. I doubt anyone's going to want to go home with long paper in their pocket on Friday, especially in uncertain economic times. I would think that most people want to be flat on Fridays and or take some profit so they can have spending money for the weekend and then come back and do this thing all over again on Monday. All right, here's a chart of the silver. Silver is really showing off. We have really taken off now in the silver. Notice how the chart has changed. We are now bullish silver. Silver has started a new bull market. We're trading above the Kumo cloud. And we pulse waved here at 28. And now here we are at flirting with the 31 handle. So we have a solid here. Solid $2 gain exactly from the last pulse wave. All right, pulse wave here was at 28.51. And here we are. We hit 30.87 yesterday. So we have a solid 2-point gain here in the silver. So if you're long the silver, again, because it's Friday, you may want to consider booking some profits here and getting ready to re-enter the market Sunday night, Monday morning time frame. As we were strong, there's nothing negative to talk about here. But again, like I said, it is Friday and you have moved up $3. So because we know how silver tends to be a victim market, they love to attack that market. Be careful. Not only can it move up $3 and $4 in a day, but it can also move down $3 and $4 in a day. So just something to think about here. But this is a very strong and powerful breakout, undeniable. Cannot deny it. The question is, can we maintain? Let's go back and look at some historical precedents here. All right. You see here, the last time we were above the Kumo cloud was in February of this year, when we were all the way up to the 37.58 handle, and then we collapsed. Okay, we collapsed. Here was the last breakout. The last official breakout was on January the 23rd of this year. We broke out from the 32.77 handle, and we continued to rally strongly, and we did that for a minute, but then we collapsed on a month later on February the 29th, and continued dropping. Long consolidation period, and then we continue to drop and consolidate and drop even lower, consolidate even longer, and then rally. So it's yet to be seen what's going to happen here. The market's been so suppressed for so long, it makes you wonder if it can ever really sustain any breakouts, or will we always oscillate between 30 and 26. So we'll have to wait and see. All right. Okay, I figured we would end with some forex today. This is a chart of the euro currency forex, and you can see we're well inside of the Kumo cloud here. So, but we have positive momentum. So it looks like the market, the euro, is going to try to run to the top of the Kumo cloud here, which is this line right here. Okay. And that will put the euro at 127.23 possibly. The only thing is, because you're inside the Kumo cloud, it's unpredictable what this market can do. Your support, though, for this move is all the way down at 123.34. So that's quite a ways down. You're looking at 200 pips from where you are now. So I assume we're going to consolidate here for the next couple of days. Not a lot that I'm seeing here, but we do have a bullish thing here, indicator. You see the bull at the bottom right hand corner there, even though we're not above the Kumo cloud per se. So it's telling me that we have the makings of a possible breakout from here. Have to watch and see. Again, you don't want that that 123.34 support to be taken out. Okay, I figure we end this with the Australian dollar. You can see the Australian dollar is bullish, and it's been trading above the Kumo cloud for some time, as you can see here. We went back inside of the volatility bands, and the market is trying to pulse wave. I would look for a strong move today above 105.50. That is a good place to consider getting long. We have support at 104.08. So those are the levels you're going to watch for. Review the sheet because all these price points and triggers will be on the sheet. Remember, take what you can, give nothing back. Have a great weekend.